Mark, let's start in the region where you are, because South Korea jumped to the top of the political agenda globally, really, yesterday after we saw those actions. Martial law declared by the president and then really quickly rewound. I know your team has been writing about the discount applied to Korean stocks, and I suppose this intensifies the rationale behind that discount.
Yes, very much so. We're kind of discussing today which Korean assets will see ongoing kind of suffering from this story, because it's not over yet. There's going to be continued political uncertainty there, and we think it is very much the stock market. I think there are many other things going on in the won. It's a bit harder to trade. It probably will suffer a little bit more, but the volatility will make it hard. You can see that even in the last 24 hours, where it's recovered back to nearly where it was before the headlines, despite a slightly stronger dollar. We think the bond markets will do okay, because the Bank of Korea will probably get a little bit more aggressive on its rate cuts, especially since the economy wasn't looking too great anyway. Korea is particularly vulnerable to higher costs of trade under a Trump presidency as well. So that's problematic, and that's why the BOK was already inclined to easier policy. So I think it's the stock market where you see sustained weakness here. It's already very discounted stock market. It can get cheaper again. At longer term, this might attract dip buyers, but not anytime soon.
Mark, we've got political chaos in France, we've got political chaos in South Korea. Can we join the dots? Should investors join the dots? Are we seeing politics rather than economics and fundamentals being the prime driver? Is this just a market where you've got no choice but to trade headlines?
I think it's more a coincidence in terms of that. These stories are completely unconnected in terms of they haven't been caused by one another. There's no causation link. But I think the flare-up of these political stories is a reminder that, yes, politics will be the dominant driver of markets over the next year, particularly because Trump is back in the White House. But now we're saying it's not just about US politics. So, yes, do trade the headlines. It is about politics. These stories remind us that, and neither is going away immediately. I think the France story is the longer one that'll run on for all through next year.
Yes. So what is the legacy of that? I mean, the euro, we've seen elevated levels of volatility in the euro then, certainly comparing it to pound volatility, Mark, over recent weeks. And a lot of that attributable to French politics. But then, of course, there's the weakness in the underlying eurozone growth story. Yeah,
I think this is going to be an extremely hard story to trade. My underlying view is that, and I said this last week and it maintains my case, is that the French situation will not ultimately get resolved until the market imposes the discipline the government cannot self-impose. And therefore, it's going to get a lot worse before it gets better. But it's not going to be a straight line situation. It's going to be very slow and drawn out. It's not going to be one sudden Liz Truss type moment. It's going to be increasing stress over time. And therefore, I think the currency, the euro weakness, is the easiest way to express that kind of bearishness over a longer period of time.